Waves of selling by investors in China drove Shanghai stock prices down again Wednesday. Despite traders' earlier hopes that a 5-day stretch of colossal losses could be reversed. In contrast to the losses in China, Wall Street surged at the beginning of trading in the United States. European markets dropped sharply at first, then regained confidence and regained almost all of those losses on the hope of further monetary support by the European Central Bank. Brokers in the West said investors were regaining confidence after the market turmoil that peaked last week when China devalued its currency. The continuing decline in Shanghai, however, reflected the feeling by investors that the Chinese government and central bank must take stronger action to support markets. Adding to the gloomy Chinese economic climate was a survey showing that activity in its manufacturing sector slumped sharply this month. A survey of 20 economists by the Reuters news agency indicated that experts believe official reports on the Manufacturing Purchasing Managers Index for August will show it contracting at the fastest pace in 3 years. The Shanghai Composite Stock Index closed down 1.3% Wednesday after a turbulent ride, rising and falling more than 3% during the day's trading. The surge in U.S. markets as Wednesday trading began was boosted by government economic data, a larger than expected rise in orders by American manufacturers buying supplies for future production. On the streets of Beijing and in brokerage houses there, comments about the market's movement and concerns about the country's slowing economy were about as varied as the day's volatile trading band. More than 100 million retail investors trade in China's stock market, more people than are members of the Chinese Communist Party. Many of them are elderly retirees. Some have put their lives' savings into stock investments and were wowed when the index climbed to more than 5,000 points in June. But since then, many have been crushed as the market plunged to below 3,000 points. At one brokerage house in Beijing, dozens of elderly investors watched anxiously for a turnaround on Wednesday, but that never came. One man who claims he escaped serious losses says he is concerned about retirees since they have very little money to spend and simply cannot afford further reductions in their capital. For those who play the market, a feeling of anger and desperation is setting in. Right now, I don't have any confidence in the market, said one investor surnamed Zhang. We are terrified by all of the things that we've heard. How low the market could go is anyone's guess. Shanghai's main index has plunged more than 40% since June, and investors long accustomed to the government's intervention are increasingly frustrated. Some have urged the government to step in and save the market and in turn small-time investors. But while some are finding it difficult to chart their course, others see opportunity. In Beijing's central business district, one worker surnamed Zhang, who does not play the market, says his parents do, and the past few days at home have been difficult. They of course feel a tremendous sense of loss when shares fall, but it's not that bad, Zhang said. With share prices tumbling, it is a good time to buy. Economic slowdown. The slowdown in China's economy is becoming increasingly evident, and many Chinese say they are concerned the pace of slowdown could result in what call a hard landing. I am worried about that, but there's really nothing I can do, said one IT worker. Rising prices and stagnant is another concern that many people bring up. Inflation is something that you notice. Everyone feels like their salary is never high enough and that prices keep going up, said Yi, who works in the business sector. The IT worker agreed. The government has worked to keep prices down, especially food prices, he said, but rent and other living costs are rising. It really depends on what the government can do to improve the real economy,